record the. Excellent. So I will share my screen very briefly before I hand it off to our wonderful and capable co-panelists. So thank you guys for joining us. I made a joke in one of my mass emails. I was like, are we still talking about this? But it's funny, I've been invited to speak on a few panels about post-Helene recovery, rebuilding. And every single time I attend, no matter the timeline, I feel like I always learn something new. So we're not necessarily focusing on like the immediate impacts and the immediate actions we took, but more so how is our course of action evolving over time past the storm. So it's like, how is Helene continuing to change the way we do real estate? So again, my name is Kimmy McBurney with Allied Home Inspection. I'm welcomed today by some fabulous professionals. Sabrina will be joining us a little bit later in the call. With Rate, she's your local go-to lender. Catherine Van Marter is here, our local attorney at law. And Kat Shackles is actually out sick. Unfortunately, we all know what's going around. So, but she did give me some information to update y'all. Seth Connolly is here. My savior is going to try and make some sense of the market data to share with us. So excited for that. And Courtney Guest with Closing Simplified is here to talk to us about all things updates from 2024 and 2025. So welcome everybody. So we will get rocking and rolling. So Seth is up first. So Seth, I am going to stop my share so you can start your share. Take it away. Can't hear you.
You gotta unmute yourself. So thanks for having me, Kimmy. I'll share some slides once I get into the Western North Carolina and Buncombe County. So I'm going to kind of break it down into two parts. We're going to go macro, the national conditions we're dealing with, and micro. And I think something that's important is here in Asheville, we really do exist in a bubble, right? A bubble of our own sort of good things, right? But the reality is we are not immune from larger national macro trends, right? Although we've had a great run for a long time, Helene has impacted us in a huge way, but we got to kind of zoom out and have that 10,000 foot view to really kind of understand how we fit into all of this, because inbound and outbound migration to Asheville is related to the national scope and the economy and all those things. So a fun fact is it's never been more expensive to buy a house. If you think it's slow, it is. It's actually very slow. There was less homes sold nationally in 2024. That's the lowest number of homes that have been sold since 1995. So we're just not selling as many homes. And everybody on this call probably inherently knows why, because they're talking with agents or colleagues or clients, and rates are super high. It's never, in 2024, it would never really got better than 6 to 8%. And when you look at those closing disclosures, a 8% interest rate on a $500,000 house is kind of what it costs around here. It's expensive. It's very expensive. So that's why less homes are selling. An election year, whether it went your way or not, it definitely made some people uneasy. They're not sure. I don't think that anxiety around moving has really changed, because there's a lot of economic anxiety. There's a huge white collar recession right now. If you're an MBA and trying to find a job, it's actually quite hard. So a lot of people who would be able to, there's also a big return to office movement. So a lot of people that we benefited from in the local market, those jobs are fewer and farther between. So the people who can move here with a work from home job, yes, they still exist. Yes, they still come here, but in much lower volume, because those jobs are saying, come back to the office. So these are factors that really kind of do play into us. And then, what we're going to see and for nationally, we look at our home prices, they're pretty higher than many places. Our median home price in Buncombe in January 2025 was $475,000, where the median home price nationally was $407,000. So yes, ours are much higher, but it's not like a California type thing. There's still some affordability here. And then I think, you know, Kat and Catherine and anybody else can probably speak to this, is the taxes and the insurance that continue to go up are really impacting people's buying power, because it's not just how much the home costs, right? Or how much you can finance. It's that all in principal, interest, taxes, insurance that continues to go up. And we'll kind of get into that post Helene. I've seen people's insurance companies drop them because they don't have a newer roof. I've seen, you know, deals that won't close unless a new roof is put on. So there's things happening that are definitely impacting nationally, but then impacting us here locally. Locally, I think it's important. We're going to go kind of drill down to the micro part of it. Is we have to recognize that like the fundamentals of our market have always been really good to us, in the sense that we have limited supply and we'll always have a somewhat limited supply. We have the Biltmore Estate, we have the Blue Ridge Parkway, we've got mountains, we've got rivers. They can only build so many houses here. So we've got that working in our favor. And then Helene happened. Well, we have a ton of damaged homes. I think the stats were, according to the county manager, Buncombe County manager, there was 9,234 residential units that were damaged. And out of that, 331 were destroyed in Buncombe County. Homes destroyed, gone. So that didn't fix our inventory problem, right? The supply and demand element, but Helene did really impact our demand side, right? So impacted supply side, demand side also down pretty bad. And so out of those destroyed units, we're really going to have to, we're so used to having just tons of inbound migration. Think about Asheville in the past 10 years. How many people are like moving to Asheville, moving to Asheville, moving to Asheville? Well, that spigot is not turned off completely, but it's a trickle compared to what we're used to. And this is where I kind of want to get into some of the stats that I think are important to look at, because if you feel like it's slow, it's because it is. It is historically much slower than it has been in many years. And if you're busy with real estate and doing deals, you're doing great. Keep it up. So I'm going to go ahead and share some stats here, which I think kind of tell a pretty interesting picture of where we're at. And I'll get to the punchline at the end, and I'll try to be brief with all this. So here is a 10-year slide. Let me sorry, this little zoom thing. So here's can everybody see that? Yep. So here's a 10-year slide of closed sales in Buncombe County. This is all Canopy MLS data. So you can see here, 2025, we are down. This is just a reality. And this isn't just Helene, right? If we think about the nationally, it's also down. So we're tracking right along with that. That doesn't mean we have some big problem yet. So from 2021 to 2025, you see this big drop. And so that means a lot. So closed sales are when people say, hey, I want to live here, the deal is done. Well, then you have your new listings. So I'm going to zoom out again. Again, this is a 10-year graph of new listings, Canopy data for Buncombe County. Well, we had it pretty consistent up here. And then right around 2022, they just dropped. And we had a little bit of bump and we hit a drop. And now we're sort of going back up. So I think this speaks to the supply side. We are not getting more houses anytime soon. It's just not going to happen. It takes too long. It's too complicated. So this is going to keep our prices relatively stable. But there are some things to consider moving forward. And you know, we can't predict the future, but we can kind of look at the past for the data. Speaking of how it's being slow, again, here is a showing data. This is from Showing Time. I don't know if you're an agent, you can look at how many showings there were per listing. And for this is a 90-day range. I printed this off earlier in the week. So, you know, you're only getting seven or eight showings per listing in the last, or till it goes under contract. So if you're only showing a house 6, 7, 8 times before it goes under contract, it feels very slow. I'm sure agents on this call have had to have plenty of conversations with their sellers like, there's no showings. What's going on? That's because demand is down. There's less people in the market who are saying, hey, I want to live in a house in Buncombe County. So this is the 90-day range. Obviously, we had the holidays, so that impacts us a little bit. You can see that the lower end of the spectrum, where there's more homes that are more affordable, get more showings. There's more buyers out there. So this is a 30-day, which isn't any better. So it's showing that, you know, for a median home, the 400 to 499 range, there's only 4.9 showings till it goes under contract. That's not a lot of activity, considering how many homes are on the market. Okay. And there's some reasons why. And I'm gonna get to the point here. This is important because for so long people have said, well, it's better to buy than it is to rent. It's better to buy than it is to rent. Well, if you think about all the development we've had in the past 10 to 15 years, there's a lot of multifamily projects that are coming online that now there's so many apartments. There's so many apartments. If you were moving to Asheville and wanted to buy a house, what you could pay. So here is a screenshot of all the rentals that are available in Buncombe County. There's hundreds and hundreds. There's thousands, 1,600 available rentals in Buncombe County. And you think of these big multifamily projects that have come on near downtown, those are luxury apartments that are sitting empty. And if I were, you know, moving to Asheville and I looked at what it cost per month to buy a house and what it costs to rent, renting would make sense for me. So I think as agents, we have to be really kind of clear about what's happening in the market, because people who are going to buy a house, it has to be very intentional. It has to make sense for them for the long term. For many years, we just had people who are like, oh, I'm moving to Asheville. We'll see what happens. I'm moving to Asheville. Oh, the COVID. Oh, moving to. That's not happening anymore. People aren't just moving to Asheville just because. They're moving to Asheville very, very intentionally. And many of us, a lot of us have had closings since the storm. Some of those have gone under contract and closed since the storm. And that's great. But that migration, that inbound migration that we're used to, is just not there as much. And then I have one more slide. We're going to the Ruiz report. And this is important because there's some real clear correlations between the new listings. We had 21% new listings that month, and then the days on market. So new listings continue to increase. Days on market continue to increase. Under contract, little bump there, you know, under contract was nice because in January, people said, oh, holidays are over. Let's buy a house. I'm sure you've seen that, Kimmy, like inspections kicked up a lot in January. Good thing. But what's not happening necessarily, what am I doing here? Is days on market are continuing to increase. So we're going to reach an inflection point at some point, and it's going to be the spring market when hundreds of listings start hitting the market. The market typically historically has peaked in late May, June. That's where the most activity happens. That's where the prices go up. And we're about to see a lot of activity. Anecdotally, I'm listing 3 or 4 houses in the next month. And, you know, I'm prepping the sellers. I'm saying, like, unless you're pricing super competitively, you should expect 90 to 120 days before you're closed. And that's going to be a real inflection point. But what hasn't changed quite yet is the prices. The sales prices have not changed. Those are really sticky because people have a lot of unrealized gains. They have a lot of paper money that they don't want to give up. Nobody wants to take an L. And if you've seen your Zestimate go up over the years and it starts to go down, unless you have to sell, you're going to stay in that house. That's what they call the lock-in effect. And a lot of people are just not moving unless they have to. But the last point I'm going to make is the original list to sale price, 95%. People are taking haircuts to get the house sold. If that's the only thing you can do once the house is on the market, if you set it up correctly and do all the marketing correctly and prep the house correctly, the only lever you can pull once it's on the market is price. And so as the days on market increase, as the inventory increases, there will reach an inflection point where prices will come down. So takeaway, I'm almost done. We're going to have to wait and see what the spring market does. We don't have enough data right now to tell. It's obviously slow nationally. It's obviously slow seasonally. It's obviously slow because of Helene. But unless the inbound migration picks up, there will be price reductions because there can't as listings just continue to pile up on the market and people aren't buying them, that will impact the prices. So wait and see, be mindful, a lot of rentals, people have to move intentionally. Yeah, that's what I got.
I love my first takeaway. We are not alone, right? All of us, we're all real estate professionals in this market. That was staggering, the last 10-year graphs that you were showing. Because I know we've been looking, like you said, micro the last few months, but wow, I didn't realize over the last 10 years, especially I think it was the new listings. The other one kind of went up and down, but the new listings was 2015 was still even high. So incredible. Thank you for sharing that. And then, yeah, at a glance, I love the kind of emphasis on pricing conversations and giving this data to your sellers to make sure they're making informed decisions about how they price their house. So anyone else on here want to chime in with a question really quick? I think that was fantastic. Thank you, Seth. No, going once, going twice. All right, you just explained it so well. No one has any questions. Well, I appreciate you, Seth. And if you would be comfortable, would you mind sharing your PDFs that you shared? You're muted, but I'm going to assume you said yes because you're so generous. Okay, cool. Seth will get them to me and I will happily recap for everybody after this. So our next special guest, Courtney Guest, no pun intended, is here. So she is with Closings Simplified. They are an awesome, awesome TC company here, based out of Hendersonville, but obviously they work remotely. They cover multiple states, North Carolina, South Carolina. She is here to know all things contract updates. You do not have to do the paperwork yourself. Phone a friend and phone Courtney. So I'm going to give it away to Courtney. She's going to introduce herself and tell you about what she's seeing and what you need to know. Courtney.
Yes, thanks for having me. I recognize some familiar names and faces. So glad to see everybody here. Yes, I'm the owner of Closing Simplified. I have been doing TC work in this area since about 2020. Before that, I was in active sales and got my license in 2018. Paperwork, like Kimmy said, is our specialty. We love it. I don't know why we love it, but we do. And we try to keep up with everything forms. So that's what I'm here to talk to you about today. Everything that I'm going to be mentioning is from NC Realtors, kind of the Q&A of how to interpret these new changes, what's the best practice, what exactly has changed. So I will preface by saying, if you have any questions at all in regards to what your firm is recommending you do, always go to your broker in charge. I'm just relaying the factual information that's from the websites themselves about those changes. So definitely any questions for sure, go to your broker in charge about that. Nevertheless, we'll just kind of dive in. I feel like by now we're used to all these changes. Last year we had changes. This year we're having changes. So we're kind of having to keep, ourselves on our toes and really adjust and learn different ways of explaining to our clients, more disclosing, which is what we learned from Kelly Allen in real estate. Disclose. So what we're going to kind of talk about first is kind of an old one. So last year, obviously, the biggest one was the compensation agreement, really putting that into our business practice of getting that compensation agreement. One of the keynotes that I've really kind of have been stressing over, or that I have come across a lot, in which I also found that it's really best practice to do this. And again, I'll send the links of the best practices from the NC Realtors as well. A lot of times when the compensation agreement is kind of initiated through either seller, buyer, however your process is with it, a lot of times it'll be missing seller signature and it'll just be the listing agent, or it'll be the listing or seller signing, but not the listing agent. It's actually best practice for every single party to sign that form, period. So they actually said that, again, it goes with disclosing, making sure everybody's aware of what's going on about compensation. So even if your seller's paying the commission, still the listing agent needs to sign. If the firm's paying the commission, still the seller needs to sign. So you need to get your buyers, your sellers, your listing agent, and the buyer's agent signing all of it, period. And that's just a best practice that they're saying that everybody should be doing. That's really the compensation form changes. There's not really anything new this year with that. The only thing that they are saying, you cannot include the compensation agreement as part of the offer to purchase. It's not a good practice to do. It's not legal to do with a contract. They recommend you getting it signed up front. I'm sure all of you guys know, and all of you guys have been trained on that. It's better to go ahead and get that compensation agreement signed ahead of time. But that really wraps up the compensation form. Does anybody have any questions or even any kind of other best practice that you have heard for that form?
Question. So obviously you guys are TCs and often you're writing a lot of these offers and delivering a lot of these offers. What is your most successful approach? Because like you said, you usually send the compensation agreement first, et cetera. Like in your perfect world, how do you deliver it? How is it received? Do you often, send them the phone call? How do you go about that?
So I would say if you're really diligent, and you really have the time, a lot of agents are also getting that compensation agreement signed before they even show a property. More so along the lines of, we're not working for free. This is your compensation that you're getting on this home, and I'm going to go ahead and request this from the seller and get it before I show the home. So I've seen it that way. I've also seen it, which also coincides with the best practices from NC Realtors, is if you are going to send a compensation agreement at the same time as an offer to purchase, so not including it on the offer, but you're just emailing it at the same time, what you need to do is send the compensation agreement with an unsigned offer to purchase with the terms. So then you're presenting your offer, you're presenting your terms, but you're not giving the seller or the listing agent a buyer signed version, because it's important that you get that compensation piece first.
Because they could technically execute the agreement without returning the compensation. Yeah.
Yes.
Smart.
Yeah. And the link that we'll share actually goes over, because that is a top question that a lot of realtors have for them, is what happens if the seller signs and returns the offer, but I don't have my compensation form. And so definitely, I really recommend you go through these questions. It really gives a lot of information about it, and it's really helpful to kind of learn how you navigate this whole compensation agreement. Yeah. Okay, so this year, I'm not sure how many people have really dived into the new forms. They're really saying to go ahead on new clients, use these new forms. They aren't going to come out with, like last year, for instance, when they changed the agency agreements, they had that form 17, if everybody knows and is familiar with that, where it brought those old forms into current form standard, essentially. So if you had, a predated agency agreement pre the change, then you had the client sign that form 17, that would bring those forms up to date to the current. So right now on the websites, they're not looking to do that. They are just saying your current agreements are fine. However, for the new clients, go ahead and start like running this through and getting the new form signed. So the first one that I think was big, and there's still a lot of talk about it. So again, I really highly recommend you going to your broker in charge and having these like real thoughtful discussions of, hey, like, what is your thought, or what are you hearing about it? What's your advice of how we should do this? But when looking at it, the listing agreement, that's the biggest thing. So there's a couple different pieces of that. The current listing agreement, starting off at the top, where like the deed, book, and page. Let me see if I can share my screen and I'll show you.
And Courtney, while you're looking that up, there was a question I'm going to ask before we leave the compensation.
Yeah.
Luann said, are you seeing an amount of compensation being offered to the buyer's agent from the seller based on what the offer price is? i.e. the buyer agent compensation depends on your offer price. Can they do that? That might be a Catherine Van Marder question too.
Yeah, we're really giving Kelly can maybe answer that. Obviously, commissions aren't set. We learned that in real estate school. The conversation, I think, I assisted in over 5, well, really my team. So we're 3 licensed transaction coordinators, assisted almost over 500 closings last year. So we have seen it a bunch of different ways. And I would say we've heard the mention of that in negotiations, but never. It's not really a topic of discussion. A lot of times, I think what I'm finding working on both the listing side for listing agents as well as the buyer is that a lot of times the sellers already have that compensation form signed. But again, it's up to whatever your firm's practices are and whatever your broker in charge is training you on. So definitely get with them and ask them that question so that they could guide you along the way to better, put those practices into your business. Yeah. Great question, though.
And
Dang.
as a point of, whether you want to do that as a active agent practicing in this area is a different question, right? I mean, is that congenial to your your co-brokers? Maybe not, right? But as a point of whether you can do it legally, compensation is always negotiable.
Yeah, I also had that conscious thought is like, you probably can do that, but if
Yeah.
you're trying to be agreeable and make a deal happen for your clients, that may not be the best negotiation tactic. Agreed. All right, Courtney, go ahead.
Yes. So back to the listing agreement. The one thing that really I noticed and I really read on that legal Q&A is the parcel numbers. So the listing agreement as it stands, and I tried to share, but for some reason I don't think my settings are allowing me to. Oh wait, it may now. Sorry, hold please.
I was muted. The bottom center of the screen, is there a green share button?
Yeah, but it's saying I have to update my settings.
Oh.
I'll link the new changes to the listing agreement. Again, we'll send that all out. But the current listing agreement, obviously, your deed book and page section, you're putting your address, the county, the PIN number, the deed book and page. Usually if there's multiple parcels, we would put the parcel numbers with a comma in between each set of parcel numbers. So if you're having, a home and land conveying with an adjacent parcel that's selling as one price in one transaction, we would just list out the different PIN numbers. Well, now there's like a heavy emphasis on, instead of listing out the parcel's numbers, you actually need to have an exhibit to the listing agreement that lists out the parcel, and you have to repeat the deed book and page, the property description, all of that information. So it's really wanting you to, instead of just specifying the parcel numbers, you're specifying on an exhibit the parcel number and the information pertaining to that parcel number like you did on page 1. So it's a little bit of extra kind of details, but I actually do think, again, it goes back to that disclosure and just making sure you and the seller are aware what parcels you're actually conveying so that you're marketing it as such. So that's the first kind of big change. The second one, and to go back on that, if you have questions about that, if you read that new listing agreement, there is a box you have to check now that says additional parcels are conveying. So when you check that box, it actually prompts you to do the exhibit. So it'll actually say on there, please put this in an exhibit. So that's good to know. The next question, which is having a lot of conversations, is commission. So before in our previous listing agreements, it would have the firm commission, and then you would break down the cooperating broker compensation. So for instance, if a firm was getting 6% and then they were sharing 3% with a cooperating broker, you would put the 6% and then the 3% in the cooperating broker. Now they're really, really disclosing and detailing it out individually. So they're wanting you to put only what the firm compensation is and what the firm is going to be receiving, and then the cooperating broker's compensation. And then there's a spot where you add those two together, and then that's your total. So we never had like a total before. The firm compensation was that total. So now it's really wanting you to separate out, okay, what's the listing firm receiving? What's the cooperating brokerage firm receiving? And then what is the total commission that is due for this transaction? So it's really separating it out. The conversation is really still going. Everybody's still trying to learn about it. So it's still a great topic to really talk to your broker in charge, talk to other realtors in your firm to say, to start that conversation about it, because it's something that obviously you're going to have to start using now with any new listing. What I've seen kind of overall based on the ones that we've been doing is they have been, there's questions that I've heard of, well, if the listing firm is, receiving that and offering the compensation, then they're confused. Like, do I need to break it down? But in reality, on closing disclosures, there's never a debit on the listing firm for the commission. It's always a debit for the seller. So really the seller is showing at the end of the deal that they're paying those commissions if we really think about those fine details. So it makes sense to me as a broker in charge for my firm to break that down and say, okay, me as a listing firm and listing agent is only getting this 3%. The sellers are giving me permission to either offer, is how it's worded on that listing agreement, or the seller is offering to do 3%. And then you total that for a 6% total commission is how it's like worded out. But those are the really two biggest changes of the listing agreement. The only other thing that's on there that is more disclosure, more detailed out is dual agency. That changed last year too, where it kind of broke out dual agency a little better, but now there's more options. There's almost like 6, I think now, where you confirm, you know, they'll approve dual agency or not approve dual agency. You know, we know dual agency can occur in different ways, either the same agent representing both the buyer or the seller, or 2 different agents within the same firm representing the buyer or the seller. So now the seller and the buyer on the buyer agency has to confirm, it's really on the buyer agency piece, but has to confirm whether they, one, approve buyer agent or dual agency. And if they do approve dual agency, are they approving the same agent to represent both? Or are they approving dual agency in the sense that 2 different agents within the firm can represent? So, but that's really kind of wrapping it up. You know, the non-exclusive listing agreement had changes, but the main change on that was just the dual agency piece. Otherwise, your more changes are going to be on the exclusive right to sell.
Yeah, I love it. Thank you so much. It's always good to stay up. And really, my favorite point to make is that if you don't want to do any of that, or if you want some help, get somebody like a Courtney to walk you through it. To me, that's one of the safest bets. And, you know, it's highly cost effective. And really, you have to think about, where is your time best spent? For Kimmy McBurney, that is not doing paperwork. So thank you, Courtney.
Yes.
Anyone on here, I'll share her contact information and I'll share the links that she was talking about. Any of you have any quick questions for Courtney before we move on? I guess I can check the chat. What does the chat say? Kelly Allen, the last part about dual agency is very interesting. I agree. I will
Yes.
say this from a
I
home
thought
inspection.
you would like that one because
Yeah,
it really.
You're talking to Kelly?
Yeah, I saw it too, because for a detail-oriented brain like myself, I feel like it is extra steps to do these initials on that dual agency part, but I feel like it really clears up the types of dual agency that there could be. And it's just more conversations that listing agents are having to have with their clients to help, you know, sellers really understand this is dual agency, this is what could happen. So it's just more and more disclosures, and I think that it's becoming a little more clear.
Yeah, I think dual agency is not discussed enough. We see it actually a lot in home inspections because it's one of the first times where clients realize they don't have the full representation as if they were, you know, a single party, you know, because they're like, oh, I'm asking my agent to explain these things and how I can negotiate and yada, yada, which, when you guys know, if it's a dual agency, it's a fine line. So I definitely feel like it's always best to have that conversation up front and be very clear about, you know, how you can represent each person if you are in dual agency. So cool. Well, thank you, Courtney. I so appreciate you being here. I know you may have to run at some point, so thank you for joining us, and feel free to share your links. So moving on. So Kat Shackles, it's her time to shine post Helene insurance. Unfortunately, she is down with the flu. I know most of us know it's going around. So she did write me some notes, so apologize for my reading, but I'm going to just kind of give some updates from her. So she said, basically, due to Helene and many other events, we're going to see rates steadily rise this year, which I feel like we kind of already know. Another rate increase is coming in June per the NC Rate Bureau, who determines the rates for insurance. This is to keep us up with the amount of volume and cost of claims. Somebody's got to pay for those claims, right? And it's not them. Underwriting guidelines, and that was my my add-on, not hers. Underwriting guidelines will continue to tighten. So roof age, Seth mentioned this earlier, will be a huge factor in obtaining coverage. Any negotiations made on a sale can be favorable and help real estate clients. But I think the point you're making is, involve your insurance agents during the negotiations and due diligence to make sure these are all vetted She said also many options for flood insurance exist through standard carriers, NFIP, and private flood policies. Even if not required by lender for closing or near floodplain, this can become useful for land movement, slope failure, mudslide, etc. So again, another important conversation to have. I know a couple insurance agents I've been speaking with have been giving lots of quotes. So that can absolutely be done during, due diligence. So Kat and her team are fantastic about getting quotes and getting them timely because they know how important it is. So she said, we will see carriers not wanting to write monoline homes, rental homes, secondary homes, etc., without an auto. We will see carriers pull out of homeowners and lines of business completely, which is already happening, and we will see a continued need for independent agents like Brink Insurance who have access to many different markets and many different carriers, so we can find the best options for our clients, even if it doesn't fit into the box. I will personally attest to that. She not only does my personal business, but my business as well. And I love that she's always shopping around and being competitive and not afraid of putting in the hard work. So if you guys have any insurance questions, please reach out to Kat Shackles with Brink Insurance. She's fantastic. All right, moving along for all the updates on all things law. Catherine Van Martyr, what are you seeing these days?
Hello, thanks, Kimmy. Thanks for organizing this and for having us. So first shout out Courtney and Courtney's team. They make my job very easy. So if you are looking for transaction coordinator, you don't already have one that you work with, I highly recommend them and their team. I would say if they're drafting your documents, you're going to have a lot less problems down the line. And shout out Kat. Kat's the best, same as Kimmy. She does all of my stuff for me, personal, business, home, everything. Answers all my stupid questions. Dealt with me when my car got hit by a mover. So like literally came to the scene of the crime and dealt with it. So you can't get a better insurance agent than that. Okay. Legal updates. So to kind of piggyback off what Kim shared for Kat, it is very important to be considering the insurability of properties. One of my favorite jokes that I've always, I moved here from New Orleans, Louisiana, and my background is in disaster relief legal response. And so one of the jokes that I always hear folks make in closings, when you have to sign, there's that document that you always have to sign for the lender that says you're not currently in a flood hazard zone, but if you ever are in a flood hazard zone, you will be required to get flood insurance. And the prevailing wisdom and favorite joke that I always hear from, whomever else is in the room with me at the time is, oh, if that happens, we've got bigger problems to worry about. Well, I always thought that was a weird joke to make when I first moved here. We have bigger problems to worry about, guys. So it doesn't matter whether you're close to a body of water, or you're a million miles away from it, way up on a hill, like a lot of us are. Getting flood insurance, at least getting a quote for it, is not a bad idea, whether it's going to be required by your lender, whether you're in a national flood zone, etc. Look at it while it's going to be, it's going to be less affordable than it was last year, right? But it certainly is not going to be something that you can't get. Still, we're not there yet, but we could be there in the future if we continue to have these climate related events. So encourage your clients to be looking at getting flood insurance before they can't get it at all in the future. I don't think we're going to be there next year, but we could be there in a couple years. Particularly with other changes surrounding flood insurance, and the insurance industry as a general statement. Other things that we're seeing are, property related damage. So or storm related damage, that we're still dealing with, whether that's, something that's discovered on an inspection, after you're under contract, or it's something, that, the individual was under contract well before, the storm and they're still waiting to close. I strongly encourage you guys to continue to be conscientious of due diligence dates and, closing dates, getting those extensions. And getting inspections as early as possible so that you can negotiate negotiate credits and circumstances related to what might even be undiscovered storm damage at the time. Particularly, we're seeing that where there is storm damage, we're still seeing issues of that pesky little clause in the contract that says if a property is not in the same or substantially the same condition as it was at the time of contract, you are entitled to get your earnest money and due diligence deposit back. That clause is very clear, but you know what's not very clear? What is considered the same or substantially the same condition. So rather than us saying, okay, it's definitely not in the same or substantially the same condition like we were right after the storm and through the end of the year, now we're looking at, are these repairs good enough, right? Do they meet that same or substantially the same condition question? And that's not a question for you. It's not a question for me. It's not a question for really anyone that's sitting in this room right now. A lot of times it's going to be a question for a judge as to whether that's going to be something that would result in the return of deposits. So if parties, buyers and sellers are not willing to come to compromise on what that means to them, that might be a question that, you know, results in litigation. So doing the best that you can to prevent that and make your clients aware of those risks as they're thinking about terminations in returns of deposits. And ask your favorite attorney, whoever that might be, you know, ask them, right? Ask in advance, ask them to get involved in those discussions, because some of them are going to be legal in nature when it comes to that particular clause. Other thing we're seeing is access issues, basically survey issues, right? We want to sell our property, but our road flooded out and our neighbor doesn't want to pay for it. And so we're going to rebuild our road here instead of there, but they're still going to want their right of way. And what do? How do we get them to not drive on our property anymore because they don't want to pay for the road and we're going to build it somewhere else, right? So we're seeing those kind of property disputes. We're seeing disputes over land boundaries. Where can I rebuild my bridge? My easement says that the capacity for my bridge can only be, you know, support one home. What does that mean, right? What does that mean when I have to rebuild it? And the waterway that we're building over is 5 times as wide as it was before. How do I not increase the capacity of my bridge and still be able to access my house? All right, so there's a lot of necessary negotiations with your neighbors, negotiations between clients and friends to make sure that you're protecting your property rights and you're supporting your neighbors in their recovery, particularly in the hardest hit areas. With that in mind, I really am highly encouraging anyone who is impacted, anyone whose land was impacted by the storm, whether that was by a water event, flooding, banks of the Swananoa are different now, right? I live off the Swananoa River. My property is technically to the middle of the Swananoa River, right? I have not taken my own advice, but I would highly suggest that I get a survey so that I know what my property boundary lines are. You know, and that applies for everyone. You had a mudslide on your property right between you and your neighbors' houses. Get a survey. Get a survey. Those posts aren't going to be there. Those markers aren't going to be there. It is incredibly important to get those surveys, even if they're boundary line surveys. That way, when you go to sell your property, whether it's today, tomorrow, 10 years from now, you're not going to end up in a mid-sale dispute with your neighbor over where your driveway needs to be. And get lawyers involved early. You know, I know everybody says, you know, I know you don't want to talk to us, right? We're the worst, right? You don't want to have your lawyer involved. We get it. We understand. We're always here for the bad stuff. But the bad news is that if you're fighting with your neighbor about where your driveway is going to be right now, you're going to be fighting when you need to sell your property to make money in the future, or your heirs are going to have to deal with it. So figure out what you need to do now. figure out what the best steps are going to be to support yourself and support your neighbors and support your community, before it becomes a problem or before it gets forgotten about. It's going to be a lot harder to fix some of these issues 10 years down the line than it is when everyone's aware of what happened. They have that visual of what happened in their minds, right? Instead, 10 years down the line, they're going to say, well, the road's always been here. You know, this is always where my road has been. That's not true. So getting those surveys, answering those questions, correcting your easements, correcting your, encroachment agreements, property line disputes, things like that. Correct them now while you still remember, while you still, it's fresh in your mind, whether that's you or your clients. And if you're not sure, ask the question. It doesn't hurt to reach out and ask the question. It doesn't hurt to talk to an attorney about it, particularly a title attorney, because you want to be able to convey your property with clear title, even if you plan on keeping it for the rest of your life, right? You've got a great estate plan in place. You've protected everything that you own for your children and your children's children, but then they can't sell it because they can't have clear title, because of something that happened during a storm. You don't want that, and your clients don't want that. So advise them to ask the questions up front. Advise them to take care of that as soon as possible. And look out for those red flags when you're viewing properties, right? Ask the questions, ask the hard questions, ask the storm damage questions, and ask them if they've had recent surveys, or, you guys know how to look that up, but, as well, but check it out and see what you need. And I think those are the biggest things we're seeing. I mean, things are a little bit slower, but they're also a little bit more difficult right now, I think, for everybody, because a lot of these questions have to be answered. So, take your time with things, be purposeful, and do them the right way. And I think we'll all be good, and recover well.
I love that. Well, well, first of all, I like talking to you regardless. I'll be your friend. Some key takeaways for me. I think it was awesome. I think the flood insurance one was a kind of an eye opener for me, realizing that rumor has it that floodplains, I don't know what everyone's hearing, it could take years to redraw them. So know that you may be signing up for an insurance increase in 2 years, whether you know it or not. So I think that's a good thing for people who are buying, like, okay, hey, this property was affected. It's not currently in a floodplain, but if they change it in 2 years, you could be stuck with a bigger insurance bill. So maybe we get a quote and we are prepare ourselves for what that may be. So I loved that. And then again, on the property line agreements, I love that notion of let's do it while it's fresh and get some boundary line agreements while everyone remembers where everything's at. So great reminders. Thank you, Catherine Van Marter. I will maybe do questions at the end, but we're kind of running out of time and I want to hear from Sabrina West. So we are going to move right along. So Sabrina West, are you out there? We're ready for our mortgage update. Tell us about the Monet for Kelly Allen on there.
All right. Can I share my screen? It says someone else is sharing.
Should let you know.
Okay. Share. There's my email. Don't look at all my emails now. There we go. All right. So I know everybody's waiting for the finance piece is the fun part, right? It's always the fun part. Right, Kimmy? It's always the fun part.
I was like, money. Who doesn't like money? Money, money, money.
I wanted to start just with, I am seeing a big uptick in the 203H disaster loans. I think that it came out right when the storm hit, and a lot of people just didn't know where they were going, what they were doing. They weren't ready to be like, oh yeah, I'm going to do this, but I'm seeing a lot of people now, like they're settled. They know they've dealt with FEMA. They know what they're doing. They know if they're approved, they know what funds they're getting, what they're not getting. And I'm seeing a lot of people starting to apply for that 203H loan. So don't let that fall out from people. There's people, it is a strict loan to an extent. You know, I had a client recently, their apartment building got taken away, but they had not moved in yet. So even though were getting ready to move in, it was going to be their place to live. It fell out of the disaster loan purpose because of the timing of those things. But then I've had other people who lived by the river in a mobile home, and I mean in an RV, and they've got approved for a disaster loan. So it's very individualized. And what I always recommend on any of these disaster loans, it's available for homeowners and renters. Okay. It does ignore the debt. So if they had a mortgage and it's in forbearance, they ignore that because they know that that's what's going to happen. Okay. What they require is that you have proof that FEMA declared you were in a disaster area, and you just provide the documentation. That is the key piece of it. It is always better if you do have a property, if your clients have a property that's completely gone, but it had a mortgage on it. Yes, they're still responsible for that, but there are different types of programs like the mitigation program through the government that will buy those properties. And having that paperwork, even if they've started it, really helps for people to kind of take the next step to move on with these types of loans. So it's 0 down, it's 100% financing. It is backed by FHA, so it is going to have mortgage insurance and those things with monthly and upfront. So because it is an FHA type of loan. So I'm seeing a big uptick in that. I still get this question a lot, and I think I know you might be getting this question because people need to find a house, or they need to know, do I need to rent? Do I need to buy? Here's where it is. So if you have, what's the difference between a forbearance and a modification? A forbearance provides temporary relief by pausing and reducing mortgage payments for a set period. Typically, they're going to start out with 3 months, and they can extend up to 12. Once they get to 12, a lender really wants to put you in what we call a modification and try to work with you on your hardship, okay, before they try to attempt like foreclosure proceedings, okay? This is useful for homeowners recovering from short-term disaster impacts like job loss and property damage. So these people didn't have to just have property damage. They could have had job loss. I think for people kind of forget this. They do offer it to everyone. Does not mean you should always take it. Okay, that's the difference. If you're trying to refinance and your job has not been affected, I always tell people, if it fits for you, do it. The last thing I want someone to do is come back to me 6 months later, whenever rates have, or a year when rates have dropped and they've been in a forbearance for 6 to 7 months and they just took it because they figured, why not? Just in case. And then they can't refinance for an entire year because you have to start making your payments and make 12 on-time payments again before you can refinance or purchase. Okay. And it doesn't mean it's forgiven. It is, you're going to pay it in a lump sum payment, a repayment plan, or they're going to defer it to the end of the loan. Okay. So as I tell my children, nothing comes for free in the world. Nothing. I would love to think differently, but it doesn't. A modification is a long-term solution that permanently adjusts the loan terms, lowering the interest rate, extending the loan term, reducing monthly payments. So what you will find lenders doing in those cases, they will turn around and they will either lower the interest rate to make the payment doable, or maybe they'll do a 40-year term or a 35-year term. So you're going to find different modifications, and modifications do not always look the best on credit, but you have to do what you have to do sometimes. But typically your lenders are always going to do forbearance before they go into a modification. The other big thing that I always try to keep telling people, I'm going to give you my little story. I didn't think there was any damage to my house. We were displaced with my elderly mother and my son. I came back from Charlotte. I woke up one morning with vertigo and I couldn't stand. And I said, something's wrong with the house. I don't know what it is. Apparently our crawl space had flooded. We did not realize it because it, receded so quickly, and our air ducts were completely full of mold from it. So a lot of times And that had been months, you know, 2.5 months afterwards. So I always tell people, like, pay attention, still record any damage that you might find. Because it's just best to have that, because I am seeing, we're finally getting assistance, you know, like my mother's house was completely gone, but it's taken a long time for these, you know, people to really get caught up to that. And then stay informed, because here's what I'm finding. Don't just say, oh, well, everybody, when it happened, everybody's given all this information. Look at this, go here, this person's doing this. And then people kind of got back into their routines. If you just go in and look to see different funds, there, you know, State Employees Credit Union, Truist, there's all kinds of different banks, you know, nonprofits that are putting money out there to be able to help people in this kind of situation. So don't forget to continue to look, you know, keep a list for your people, you know. And then here's the fun part, and I know y'all really want to talk about rates. How many? Everybody raise their hand? No? Okay. Sarcasm, I just saw it through the screen. So mortgage rates. So the average mortgage rate right now is about 6.85. Okay. We're experiencing fluctuations all the time. But I will tell you, it was very, very slow in January, but in the last probably 2.5 weeks, I've had 18 new applications. I feel like people are kind of getting prepared for that. So I always say, you know, I never count my closings. I always count people, referrals, and who is interested and who's looking to do something, right? So we have seen an uptick nationally, with increased applications from the previous week. Obviously, properties are still averaging about 89 days on the market, which I think Sean already said. So those are the big things. What influences the market? Obviously, inflation influences the market. The other thing that we need to know about rates, so what are the projections? How many people are given a projection? How many different numbers have you heard? Anyone? No? Like 10 different numbers, right? So I didn't decide to give you one. I'm going to give you my opinion, but here's 4 different sources that kind of give you an idea of where we're going to be. Okay. National Home Builders thinks that projects a decrease to around 6.5 by mid 2025, potentially falling below 6 by the end of the year. Fannie Mae anticipates mortgage rates remaining above 6% throughout 2025, with home prices growth moderate but still positive. Housing Wire, I love what Housing Wire does. They're like, we're not going to give you a rate. We're going to give you a rate between 5.75 and 7.25. And then U.S. News Report forecasts an average rate of 6.3 for 2.2 in 2025, and a slight decrease to 6.2 by the end of the year. So in short, how many people know what loan level pricing adjustments are? No? Okay. So loan level pricing adjustments went into effect about 2 years ago. That means basically when inflation went in, Fannie and Freddie said, we're going to make people who make more, second homes, investment properties, we're going to raise those rates, and we're basically going to be able to hand that money to people who can't put as much down. So loan level pricing adjustments, there are 5 factors that always affect any type of lending in general, but it's always going to be credit score driven. It's also going to be loan to value driven. And then your loan amount means more now than it used to, right? Anything below 300, there's still a cost to do a loan. There is an average cost for any lender to do a loan. So sometimes you're going to see rates be a little bit higher on those, and it's not supposed to be, but it just affects rates in general that way. So I will tell you what I have locked this week alone. I have locked a 5.99 interest rate. I have locked a 6.25 interest rate, and I have locked a 6.875 interest rate in the last 3 days. And you go, well, how did that happen? Why are they all over the place? I am still a believer that it doesn't matter what the market's doing. We are not going to be able to control everything. But I take a behavioral finance approach for this particular reason because everybody's in a different place in their life. Okay. People are looking at their overall budgets, and 2 of those loans were on 7-year arms. So the 7 and the 10-year arm really is coming out strong right now. That was that 5.99 rate. Okay. And people need to look at this. People are like, oh, but I'm scared of arms. The reason people got scared of arms because people are going into 1 years, 3 years. That's not enough time for people to get out of what they started. Okay. If you look statistically, most people make changes anywhere from 7 to 10 years. How many people are scared of adjustable rates? Okay. Because you understand it. But what happens is people don't really realize that adjustable rates are not that scary. I had somebody tell me the other day, they're like, that's just too scary for me. I've had a house for 17 years and I've refinanced it 4 times. Do the math. If you don't go in anything less than 7 years, then your risk factor, your benefit to risk really does get better. And you want to look at how much that can save you. And then you want to come up with a plan for target rates and stay in touch. I stay in touch with every one of my people yearly. Like if I've got you on a target rate, I'm letting you know, hey, look, this is where our goal was when we started this. Are we staying in touch? So just pay attention to those things. It's not a one size fits all business anymore. Obviously, these are the things that affect the market, economic indicators.
Sabrina, I'll pause really quick because there's a question. I don't know if it's more timely to answer. And this is for Sabrina or Seth, but do you guys know, and maybe Sabrina too, because you're on this side, do we know when the majority of insurance checks will be dispersed? I feel like that's probably property by property, but are you seeing an influx of people with insurance money to spend? That sounds frivolous, but yeah.
I mean, it depends on when I'm not seeing I mean, I can only go what my personal information is, but
Catherine Van Marter's got it. She seems to have timely information.
Yes, I'd say about 70% of claims that were filed immediately after the storm have been paid out at this point, depending on the work, right? So as long as the contractor has gotten the work done, they've been paid, but some of them are holding the payments based on contractor completion.
Yeah, I mean, and I'm kind of in that world. I have a construction company. We are doing some claims. So same, we're working through them. But I think it goes back to Seth was saying like there was like 9,000 properties damaged. Like I think it's kind of a drop in the bucket as far as our overall inventory. So my personal opinion, I like Sabrina's words. My personal opinion would be that there's not going to be any large influx. So
No.
yeah, and Catherine's shaking her head no. Sabrina is no. So great question though, Luann. Appreciate it. Okay, Sabrina, go ahead. Take it away. I know we're running over, so everyone, FYI, we are recording this. If you need to go, it'll be on YouTube later.
That's basically all that I really had is really just pay attention. I mean, most of my people right now I mean, if I could tell you the number of people who are pre-qualified for 350 and below, which is really hard, you really need to be talking to a lender that can be very, very creative. I think it is more important now to get people in homes that can, because I would tell you that my brain is fried a little bit, but I'm fighting for the little people, and if you can find something, I will tell you, sometimes you might negotiate, you might go in on a full price offer, but then you might say, like I had somebody recently, I needed them to negotiate a 1% discount rate, not because that's where the rate's at, but because I had a tight debt to income. So I don't want to put anyone under contract if they're out of their little ballpark range. I needed money to be able to say, okay, we might be able to buy this down, but we're going to get them in a home. Okay. And this person was displaced. So it's those kinds of things that you really, really want to get creative. It doesn't mean you have to do it. You just have to be able to call somebody who knows how to do it.
All right. Great. You guys, I'm speaking from personal experience. Sabrina just did my most recent home purchase. Her whole whole picture financial approach is incredible. Also, I have personally referred to her clients that were in a rental situation. I did not realize that the 203H is also for renters. So basically, if you know anyone who's impacted by the storm and they think they're not in a position to be helped, please get them in touch with someone like Sabrina, who's got all of these different resources at their disposal. So thank you so much. I'm going to, Sabrina, if you can stop sharing, I'm going to share one quick last thing from moi. Yes, I'm going to cut you off. Oh, I don't know where my thing went. All right, we lost it. Not important. I will share a link, but really from inspections, an inspection is only good for the day you get it, right? So people are like, well, what are you seeing from the storm? We're seeing the same things we've always been seeing: water damage, roof damage, foundation damage, all that stuff. So it's not really news to us. And also, we don't know what it came from, right? We can't say if the water damage was from the storm or prior, but it does give you a great snapshot of what the property looks like. So please get your home inspections. This is no time to skip inspections. And know that for sellers, we are offering, and I'll send this out in an email, post-storm inspections for sellers. So like if you have a seller in Swannanoa that didn't have storm damage, thankfully, but people are going to see Swannanoa and have questions, we are doing post-storm inspections, basically just giving you a checkup on just the post-storm affected areas. So roof, attic, crawl space, basement, to give you a clean bill of health. We give you a cool yard sign that says this house has been post-storm inspected, so your buyers have confidence. We've got 3 of those out right now, so really curious to see some feedback from listing agents on how those perform. Thank you again so much, everybody. Seth, you were phenomenal. Courtney, I appreciate you. Sabrina, Catherine, Kat, thank you all for being here. If you want to watch back, this will be on YouTube. And I appreciate you all and hope you have a great rest of your day. Peace.
Thank you.
Thanks, everybody. Appreciate it.